Hey everybody, Chris Pulver here, and welcome back to another segment of the Pulver Report, where we trade to be profitable, not perfect. Today's topic actually takes me back to day number 1 as a Forex trader. One of the first systems or strategies that I ever applied in trading Forex was actually a day trading strategy, or some of you might know it as a scalping strategy. So the topic that I wanted to address today is this: do scalping strategies actually work? And specifically, I'm talking about Forex today. Right? So the short answer is yes, they work. The long answer is yes. So which one do you want? You want the short answer? You want the long answer? So while the short answer is yes, perhaps you'd like to know how you can actually be successful with some of these scalping strategies. There's so much more to it. And so I want to share my experiences with my own personal scalping systems and day trading strategies. Full disclaimer, I love day trading. I love scalping. I love the idea of punching in on the time clock, focusing for a few important hours when the markets are moving, do everything in my power to win the day. And then I punch out, go about my business, go about my day, and I don't even think about trading until the next day. And that's precisely what I did for about a year when I was first introduced to Forex trading. But then I started to realize that I was trading every day. And so when I'm trading every day, I started to notice that the quality of my trades were not ideal. And from someone who is competitive, I like to win. And if I'm not winning, I need to figure out why. And so I was getting really mad when I started to lose. I started increasing trade sizes. I was doubling down, right? I learned about martingale trading where I'm doubling my trade size. I started to trade more than my max loss rule, which at the time was 3 losses, and I should stop trading. I started to recognize how I was just wanting one win, just one win after a string of losses to make me feel better. And so if I wasn't winning the day, right, and I wasn't typically, when I'm taking these strings of losses, it really just felt a lot like gambling. So here I was trading more, losing more, starting to break my rules, and I just wasn't happy. So the good thing is it only took a few weeks of this, and I just needed to separate myself from the markets. I needed to decompress, I needed to reassess everything, and look, I absolutely was committed to being a trader, but the way I was going about it was certainly not to get the job done, and so I needed to take another angle, all right? So I think at one point in time, I'm sure every trader goes through this same introspection, self-talk, maybe even a little existential crisis as a trader. You know, the markets will make you reevaluate everything when it comes to what's on the line, your money and your emotions, all right? And so this is why with my risk disclaimers, I say that we should only be trading with money we can afford to lose. And trading does involve substantial risk, right? Because you should, and it does, right? So let's get back to the original question of this segment. Does day trading or scalping actually work? And in my experience in trading Forex, the key ingredient, the one thing that we all need, is volatility. And boy, oh boy, have we seen some volatilities go up, go down. Look, my primary gauge, my barometer for volatility is the euro dollar. It's one of the most liquid and highly traded currency pairs in the world. And back in the day, daily trading ranges on the euro dollar were quite high. So if you check out the screen, this is a euro dollar monthly chart. This data feed you're looking at goes back to 1993, nearly 30 plus years. And what you're seeing is the 1 month average trading range. And so for these months, you can see volatility average anywhere between 170 pips and 830 pips a month. Now that's from a low to a high. And if you see in the middle of the screen, you'll see that volatility was a bit of an outlier back during the financial crisis in 2008 and 9. You know, this is during the bulk of the financial crisis, which makes perfect sense. And it just so happens that was when I was introduced to Forex trading. So I'm learning how to trade during a financial crisis with crazy amounts of volatility, okay? But then you start to notice that things are changing. You know, month to month, the difference between 170 pips from a low to a high to 800 plus pips from a low to a high, that is substantial. So think about this difference, right? 1 month you're trading and the market moves 200 pips from a low to a high or a high to a low. And then the next month, it's 3 to 4 times that, right? And we never truly know when this is going to happen. We don't know what months are exactly the best for trading. And look, you can use all these clues, right? You can use historical references, seasonality, patterns, right? Range patterns, trending patterns. You can even look at your technicals and fundamentals, right? But it's still just a grind to day trade, okay? So here's my rule of thumb when it comes to day trading or scalping in the Forex market. And for me, this has worked really well to help me, get in when it's time to get in and not trading, avoid over trading if certain things aren't met. All right, one thing I look for, I'm not really interested in day trading or scalping if the daily trading ranges are less than 100 pips a day. I'm not interested in day trading or scalping if I'm not confident in the prevailing or dominant trends. You should be seeing another pop up on the screen right now, and that shows a list of all the majors and crosses in Forex. That's 28 currency pairs, okay? Now, right now with this snapshot, this is a 4-week daily trading range average, and only 3 of the 28 are moving over 100 pips a day. And on any given day, the best way to trade those 3 would be if I can determine that in real time, we have a currency strength chart showing that one is very strong and one is very weak, all right? That gives my trade the best chance to be profitable for that particular day. And with just those filters, right? 100 pips a day and a currency strength chart. Right now, I don't have a lot of day trading going on. But one thing we know in the markets is a period of low volatility or suppressed volatility is often followed by an expansion and high volatility. And hopefully, a little volatility goes a long way. And that makes day trading and scalping way more doable and certainly way more profitable. So does this mean that if these Forex pairs, the 25 other ones are not moving at least 100 pips a day, that I don't trade them at all? I just stay on the sidelines? On the contrary, right? I trade a lot of these boring, low volatility Forex pairs. And I love them, okay? But I'm not scalping them in and out. I'm not in and out looking for breakouts because the markets are reluctant to move, right? And so if I'm going to show up and trade for 3 hours, it's a 24-hour market, right? Remember, Forex is 24 hours a day for 5.5 days a week. So price finds a way in a 24-hour period to hit the high of the day or the low of the day, right? Maybe it's a 20 to 30 pip move. Maybe it stretches 100 pips. Maybe I'm not even at the computer, right? So how the market moves is never in our control. But what I am in control of is my trade size, how I manage the trades for this particular session if I'm trading for a 2 to 3 hour window, but I'm never in control of when the market moves, how fast the market moves, and truthfully, how cooperative the market is, right? So even nowadays, when we stare at an economic calendar, let's say that we're looking at the Forex Factory calendar or any economic calendar, and it's littered with medium and high impact news, we expect volatility to be somewhat persistent for the week. It still might be a crapshoot, right? We might see a lot of noise, a lot of indecision. Maybe it's good for the hour, but that, it gives the market 50 pips in a short amount of time and then takes it all back for the next hour. So news trading can still be very inconsistent as well. So I'm saying all of this to shed some light on any type of day trading system or strategy. It has to be aimed at being very precise, okay? These type of systems or strategies should be focused on winning the day and then stop trading, right? It's way too easy to overtrade in a quiet environment. We have no idea. We come to the market with expectations, but if the market's not moving, there's just not really a high quality trade for us to take for that particular day. In fact, one of my biggest challenges right now is actually working on some robots that are, I'm just calling them the win the day systems, okay? And I want them to do exactly that. I want to program these type of robots to enter, to exit, to manage the trades from start to finish, right? And if I can let my ego go and my emotions go, I just want the robot to take trades on sound logic and win, stop trading, and then rearm itself for the next day. So I'm experimenting with several different strategies, but each one is having some of the common elements like increasing the trade size if I lose. Not by a ton, like little increments, little step increases, but it's optional. If I'm not comfortable increasing the trade size, then I don't have to, okay? I have these robots trading a very specific window. I know it's a 24-hour market, but I don't want the robot to be on 24 hours a day. I want it to be on for a active trading session. Maybe it's a 2 to 4 hour window. Maybe it's an 8-hour window. But if it can make profit very quickly within the first maybe 30 to 60 minutes of trading, stop trading, give me my money, and then rearm itself looking for another trade the next day. I also have these robots trying to eliminate risk quickly, okay? Trying to let profits run at least 1 to 1, ideally 2 to 1. Because that way the numbers make sense, right? Net profit on a 2 to 1 reward to risk. As long as I win 34%, I'm making money. So if I'm precise with a smaller time frame, good entries, let's say I can chalk up a 45 to 50+% win rate with a solid surplus in profits, the numbers make sense for me to be net profitable. And I know this, I know that these robots will take losses, okay? But robots take losses a lot more gracefully than I do, okay? I don't like to lose because I will go back to the drawing board and try to figure out what's going on, how do I change it, how do I increase this win percentage, when the reality is, if it's a good reward to risk setup and the robot wins a decent amount, I'm gonna be fine in the net profit category. I'm also incorporating trailing stop loss features because I want the robot to manage these trades to completion. I can step in and intervene if I want to, but I want the robot to manage the trade and then stop trading, rearm itself, and just give me a pip amount or a dollar amount to be profitable. So there's obviously a lot more to it than just that. Like those are some of the key components that I'm going to include in all of these different win the day type systems. But I'll try different strategies, I'll experiment and see which one actually proves to be the most successful, and I'll use it. Okay, so I am working on those robots right now. I'm just going to have kind of this win the day series that I'm working on, and I will keep you posted on any of that progress, and I will share results in my live sessions. So let's take this a little bit further, and I'm going to give you a simple list of items that I'm looking for when I'm scalping, right? To see if day trading and scalping might be for you, but maybe not. So these are things you can start with. Number one, okay, does the Forex pair move 100 plus pips a day, right? If yes, then that Forex pair is a candidate for high volatility day trading. You're looking for breakouts, precise entries, move that stop loss to break even or better, let your profits run to a 1-to-1 or greater, and you're trying to have the highest possible win percentage, okay? If the daily trading ranges are medium to low, look, we can still trade. We should probably just set different expectations, like the following. Are we trading something that is strong versus weak, okay? If we have the pound, which is strong, and the Japanese yen, which is weak, then I should be buying the pound yen, right? And I should be riding that real-time strength. Now, is it strong versus weak for the current day? Or is it the overall dominant and prevailing trend from the higher time frame, right? If we're in a buy zone on the daily chart or the 8-hour chart or the 4-hour chart, if I see those alignments, I should trade in the direction of the trend and with the path of least resistance. And for trades like that, I have this awesome visual system called Right Trader. I have an auto version of as well. It's Right Trader Max. I have an auto component. I can trade an expert advisor. And this system, I always look for entries. I can always find an entry using Right Trader, especially when it comes to the alignments of higher time frames and lower time frames. So when I'm confident in the dominant trend, I will go down to a 1-hour chart, a 30-minute chart, a 15-minute chart, even a 5-minute chart. And I look for those precise entries on the smaller time frames, and I try to let my profits run. So I'm telling you, I can show you this in the Pulver Report. We can go to a live session, I can talk about this, and just ask me, right? Ask about Right Trader Max. So if I can buy and have dynamic support and the overall trend is bullish, I can find the opportunities to buy low with a smaller time frame and have that prevailing trend be strong enough where I can have maybe a 20 to 30 pip risk and have the market go 50, 60, 100 plus pips in my favor. So we're talking about precise entries with the ability to let those profits run. That is the beauty of aligning higher time frames and lower time frames. And think about this. This is still with currency pairs that may not be moving 100 plus pips a day. So rather than seeing pushes and trends of 50, 80, 100 plus pips, if it's a low volatility environment, then maybe we look for 10, 15, 20 pip runs. But that's still enough to get in precisely and eliminate risk and take some profit. And just like with a lot of other strategies I talk about, if I'm trading Forex, if I'm trading stocks, options, cryptocurrencies, this all comes back full circle, okay? We're still trying to buy low, we're still trying to sell high, we're still trying to eliminate risk, and we're still trying to let our profits run. But when it comes to day trading and scalping, here's what I'm really looking for. I'm looking for high volatility. I'm looking to trade strong pairs versus weak pairs. I'm looking to trade with the prevailing trend. I'm using simple price action and some visual indicators to help me align on multiple time frames, right? So again, if the overall trend is bullish, if I align the 4-hour, the 1-hour, the 15-minute, the 5-minute, if everything aligns bullish, I get the trades, I try to let those profits run. You let those profits run to a solid reward to risk, that's an excellent spot to be protecting your profits. So as I said earlier, if you're interested in seeing this entire strategy, right? I have an entire strategy on a breakout trade with simple price action. If you want to check this out, look for my Keep It Seriously Simple video series. It's lesson 11. That video will show you how I use a currency strength chart, which is real-time data. I'm looking for strong versus weak. And it also walk you through a simple breakout pattern that I'm looking for during an active trading session. Okay? If you'd like to see more on the visuals or you want to see more about the Right Trader system, just leave me a comment for this video that says Right Trader, right? Just type it in. Just type in Right Trader and I'll show you the visuals during one of my live Pulver Reports on Mondays or Fridays. And if you like today's topic and you'd like to see this related to stocks and not just Forex, then leave me a comment that says day trading stocks or scalp stocks. Go ahead and make that like the secret phrase, okay? What I'll do is I'll do a video just like this and I'll take you through my best practices for day trading stocks and how to find stocks week in and week out, right? As always, I will continue to look for opportunities and I'll continue to help my Flex Trading Room members and my Equities On Demand members. And the goal is see it, protect it, and collect it, okay? Thanks for watching. Please do this. Please take one extra second, click that thumbs up button, click that like button for me, subscribe to the channel, and click the notification bell if you haven't already done that. And while you're at it, share this video, right? Share this video with someone who you know could benefit from this information. It's all free education. I'm just trying to help traders be more consistently profitable, right? So until next time, happy trading, lots of profits. I'm Chris Pulver. See you in the live markets. Take care. Bye.